Welcome to Furniture Industry News. It's December 15th, 2025, and we've got a lot to cover as we head into the final stretch of the year and look ahead to what's next. First up, let's talk about the holiday rush. The season is shaping up to be a big one, with forecasters expecting holiday spending to cross the $1 trillion mark for the very first time. That represents a growth of between 3.7 and 4.2% over last year. As of early December, consumers had only completed about half of their holiday shopping, which means the final push is on. In fact, Super Saturday, the last Saturday before Christmas, is predicted to set a new record. An estimated 158.9 million consumers are planning to shop, which would surpass the previous record from 2022. Looking at the most recent numbers, our sector is holding steady. Furniture and home furnishing stores saw sales tick up by 0.53% year-over-year in November, though they were flat compared to the previous month. This was part of a healthy overall retail environment where core sales grew 4.66% year-over-year, so we're seeing solid consumer activity out there. While these current numbers give us a snapshot, the bigger picture for the coming year is starting to take shape. Economists note that the economy has been beaten down by tariffs recently, and while there's some concern about layoffs, there are potential bright spots ahead, including the possibility of lower interest rates. For our industry specifically, after a challenging period, furniture sales have stabilized. We've been through a 3-year downturn following the pandemic demand pull forward, and the consensus is that the industry is now back to a state of normalization. The outlook for 2026 could get even better, especially with support from the housing market. Homeowner balance sheets are being described as the healthiest in history. Consider this. The average homeowner has over $200,000 in tappable equity, which could fuel a significant amount of remodeling and furniture purchasing. On top of that, the upcoming tax refund season is projected to be one of the biggest ever. That could lead to a surge in spending around March and April, particularly among middle and upper-income households. So, who is this consumer we'll be selling to? The data shows a growing income polarization among shoppers. Nearly 40% of consumers earning less than $50,000 a year saw their income decline. Meanwhile, 60% of those earning over $200,000 saw their income rise. This is creating a spending gap, with lower-income consumers seeking ever lower price points, while the affluent consumer remains quite active in the market. That affluent household, by the way, is generally defined as having an income above roughly $150,000. We're also seeing shifts in generational priorities. Younger consumers, specifically millennials and Gen Z, are more likely to prioritize a dining room purchase than previous generations, and Gen Z is becoming an increasingly important demographic to watch. Financing continues to play a key role in closing larger sales. Nearly half of surveyed consumers indicated they were likely to make bigger purchases based on the amount of credit they have available. And the customer walking through the door is different too. Thanks to social media and HGTV, consumers are more educated about design. Or at least they believe they are. This changes the role of our salespeople. It's less about features and benefits and more about becoming a problem solver. Retailers are finding real success by offering free design services to give customers the confidence to pull the trigger on a purchase. This also opens up a significant opportunity for retailers to partner with interior designers, who often handle large projects and would prefer to work with a retail partner for logistics and sourcing. Of course, it's not without its challenges. On the tariff front, a Supreme Court decision is expected soon regarding the president's authority to impose them. However, analysts believe that even if the court rules against it, the administration could use other legal means to maintain a similar tariff structure. The bottom line is that planning uncertainty is likely to continue, but industry leaders see these pressures as creating opportunities. The tariff situation has forced manufacturers to develop more flexible and nimble supply chains, which has been a real boon for domestic upholstery. On the retail side, the focus now is on decisive product assortments, strong vendor relationships, and maintaining consistent marketing, even when things are tough. Success also depends on understanding the modern customer's journey, which has shortened to just 55 days. With 48% of customers now buying on their first store visit, retailers essentially get one chance to make the sale. And that experience doesn't end at the register. Last-mile delivery is becoming a major brand-defining opportunity and risk. It's crucial to treat carrier selection as a strategic decision, vetting partners carefully to protect your brand reputation. Looking further ahead, the conversation is shifting dramatically to technology, specifically AI. Artificial intelligence is expected to significantly impact customer-oriented roles, including sales. Much of the transactional work in sales, things like reciting features, quoting lead times, or tracking orders, can and will be automated. To stay indispensable, sales professionals must evolve into storytellers and relationship builders using AI as an assistant. Specialization and deep product knowledge will be absolutely key. As we look to 2026, experts are saying that retail is entering what they call an autonomous era. 5 key shifts are expected to define this new chapter. First is searchless shopping, where AI agents will make purchases on behalf of consumers. This means retailers need to optimize their product data for these new systems, not just for human eyes. Second, physical stores will transform into powerful media channels, with digital screens and targeted advertising creating new high-margin revenue streams right on the sales floor. Third, merchandising will become a real-time, AI-driven operation, with algorithms constantly adjusting assortments, pricing, and promotions based on live data. Fourth, with consumer budgets tight, loyalty will depend more on tangible value, high-quality products at competitive prices, rather than on pure emotion. And finally, sustainability will shift from being a messaging point to a core business model. Circular retail models like resale and rental will become significant growth drivers, scaled efficiently with the help of AI. It's a lot to think about, but it's an exciting and transformative time for the industry. Be sure to subscribe to stay up to date on all the latest developments.